Hello everyone and welcome to my morning report analysis and videos with me, Richard Perry, market analyst at Hantec Markets. On Wednesday the 19th of January, markets are still sort of dealing with the fallout of this Brexit vote that we had in UK Parliament last night. Sterling had a bit of a wild ride yesterday. I mean, that was pretty much accepted that was going to be the case, but what the arguably strange reaction was the fact that Sterling pretty much rallied exclusively, didn't have the big sell-off on the vote defeat of Theresa May, but subsequently there was a significant gain actually on sterling from certainly the levels that it saw prior to the vote. And those gains have basically continued today. You're sort of holding back up above 28 figure and sort of holding on to that. And in terms of risk appetite, it seems fairly stable. The interesting thing is that we're seeing FTSE 100 underperforming. Could that again be something to do with the negative correlation between that and sterling? Perhaps there, but generally speaking, we've seen risk appetite which has sort of been maintained really. Volatility continues to fall on S&P 500. I suppose breaking out on Wall Street last night would certainly help that. And you can see that there's a mixed view really on how the dollar is moving today, and you can see the dollar index is basically sideways, not really doing a great deal. You can see that through the majors, where euro is basically flat, yen is broadly flat, but the commodity currencies have just suffered a little bit in the last few minutes. And that's interesting in itself, I suppose. But generally speaking, gold and silver flat, oil pretty much also flat, and yeah, we're sort of almost in a wait and see mode today, I think. As I said, the dust settles on this sterling move that we saw yesterday. Now, in terms of data points today, we've got retail sales for the States, but in front of that, we've actually had UK inflation, and UK inflation. Let me just show you. UK inflation slipped back again on a core and headline basis, but it was interesting that the core inflation actually ticked a mild bit higher. Actually, sorry, that was core inflation ticked a mild bit higher, but RPI down, CPI down. And sterling is not really interested in that at the moment. Sterling has sort of taken account more of the Brexit manoeuvres and sort of, if you want any sort of update on that, I've written a series of reports on our website on the comments section, so have a look at that and get my take on how Brexit is moving. But certainly the Brexit impact on sterling is more considerable than the than the inflation data. So we're looking at US retail sales today. Expected to see a month-on-month growth of 0.1%. Now, not as much as the November reading. However, considering that you had Black Friday in November, I think a December growth is pretty positive actually, so I think that's going to be seen as a decent number today. And then we've got the EIA inventories later on, minus 2.6, so it continues to build on the EIA oil inventories on the crude stocks. Distillates continues to draw down, continues to build on the distillates and gasoline though, so we'll see how that sort of impacts the oil price, which I will show you has ticked a slight amount higher back in the last sort of day or so. Right, my chart today is the US dollar CAD. Now, it's interesting that I just showed you that oil chart, because I think that dollar CAD and oil are very negatively correlated, and you see that dollar CAD, the oil price fell sharply from October to December and then has picked up in the last few weeks. Contrast that with very similar sort of negatively correlated rally on dollar CAD and then subsequent correction in the last couple of weeks. And you can see that oil has started to pick up in the last day or so, and subsequently this little rally on dollar CAD has started to roll over. Now this, I think it looks to be an interesting point at which this rally is rolling over, because you've got this old pivot, about 100 pips really, between 32.90, 33.90 area. which is a basis of overhead supply now, a bit of a pivot range, which is resistance. And interesting that the resistance came in around that point on Monday and yesterday, and continues to be the case today. So it looks interesting, the fact that momentum indicators are more correctively configured now. RSI still under 40. MACD line is falling below neutral. Stochastics again had picked up, but it's not really exceptionally positive on the recovery there. You can see here on the hourly chart also we're sort of more, I suppose, on a near-term basis neutrally configured, but I think given the fact that the recovery hasn't really taken off and the resistance is being found, I think it's more sort of putting pressure on 31.75, which is basically again another pivot between October and November. You can see here between 31.60, 31.75 area being a basis of support. So it looks like that level is going to be tested, and a break below that would be interesting because that would be below all the moving averages, and that would certainly then start to open all these sort of support areas from back in November area, which was sort of 29.60 and 29.10 before the 27.80 level. So it'll be interesting to see if that pivot line can hold, because if it breaks to the downside, I think that's going to regenerate some downside momentum. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.